What's up guys, welcome back to the channel. My name is Joseph, and in today's video I'll show you exactly how to use moving averages when you're trading stocks. Moving averages give you the average price of a stock over a certain period of time, and they also help you determine a trend within a particular stock. So make sure you stay tuned because I'll go over exactly which moving averages you want to be using, as well as how you can use them to maximize your profits. If you're going to enjoy this video, make sure to give it a thumbs up and subscribe. It only takes 2 seconds and it helps out the channel a lot. Also, if you want to be a part of a free Discord community where you can ask me questions about anything or even hop into some of my plays, make sure to check out the Discord channel in the description down below. Now, before we pull up Thinkorswim on my computer, the first thing I want to show you guys is what exactly moving averages are. And I did touch on it a little bit in the intro. As I said before, moving averages give you the average price for a stock over a given time. Now, there's 2 moving averages that a lot of people talk about. There's SMAs and then there's EMAs. And the main difference between the two is that simple moving averages equally weighs in each day of price action, whereas the EMA weighs in more recent price action on the stock. So with a simple moving average, it's not gonna hug the stock price as close as an EMA because, as I said before, the EMA takes into consideration more of the recent price action. And one more thing I want to mention is that you want to be using moving averages because they make for great entry points when you're swing trading or even day trading. So now I'll pull up Thinkorswim, show you exactly how to add these moving average, and then I'll also go into depth on which ones you should be using for your trading style. Alrighty guys, now that we have Thinkorswim pulled up on my screen and we have a brief overview on what moving averages are, first things first, I'm going to show you exactly how to add them to your chart, and then I'll go over into more depth on which ones you want to be using for your trading style. Now, if you already know how to add the moving averages to your chart, you can skip to the time frame up above, and that will go into which moving averages you want to be using. Now, first things first, when we're adding the moving averages, we want to go over to studies, and then once we click on that, we can click add studies, and if we scroll down towards the bottom half of the chart, we'll see it says moving averages. Now, what we want to be adding is this simple moving average. And once we click that, we'll see that light blue line pop up on our chart. Now, they automatically give us the 9 SMA on the chart, but we don't really want to use that. So we could go over to studies, click edit study, and right here, if we double click it or press that settings icon, we can now edit exactly the moving average to how we want. And the first moving average I'll be adding to the chart is the 20 SMA. Now, that's where you want to put the length, which is the period of time for the moving average. So I put 20. And then for my smaller moving averages, I typically go with a brighter color. So I like to go with like a gold. And once we click OK and apply, it'll show up on our chart like that. Now, I do use 3 sets of moving averages, so that's the first one, which is the 20 SMA. And in order to add our next 2 moving averages, we could just go over to that search under studies and then select simple moving average, and it'll pop up right there. And we could double click it again to add a third one. So we have our 20 SMA, and now let's add our second one, which what I like to use is the 50 SMA. Now, I typically set this to a bluish color, so I'm just going to pick this blue color right around here. Doesn't really matter. You can select whatever you want. And then in order to edit our last one, we'll double click that. And what I use is the 100 SMA, and I'll make this a reddish color on my chart. So once we click OK and apply, it'll show up right there on our chart. And these moving averages are very, very helpful when you're trading. Not only do they act as great entry points, but a lot of them are being used to determine the trend up for the market as well. And these are the 3 moving averages I use when I'm swing trading stocks. Now I'll go more into depth on why I pick those specific numbers. Now, the 20 SMA is more of a short-term outlook on the market. When a stock is in an uptrend, as we can see, we have SPY right here. If I zoom in a little bit, we'll see that when the stock is gradually going up, it typically bounces off of that 20 SMA. If I zoom in a little bit more, we'll see that when the stock pulls back a little bit, it's hugging that 20 SMA, and then it has another move higher. It pulls back a little bit and then has another move higher. So on smaller pullbacks, as I said before, the shorter outlook, that's where the 20 SMA comes into play. Now, for the 50 SMA, that's more of a medium term outlook on the stock. As we can see on steeper pullbacks, it pulls back to that 20 SMA. I'll circle that there for you guys. We get a nice bounce off that support, and then it moves higher in the overall direction of the stock. Same thing right here. We get that bullish move towards the upside once it retraces from the 50 SMA. And then for the 100, it's more of a longer term simple moving average you want to be using. And as we can see on bigger pullbacks, it pulls back to that 100. Now, just to give you guys a heads up, most people use the 200 SMA. When a stock is trading above the 200 SMA, that shows that the trend is in a uptrend. And then when the price is below the 200 SMA, that's when a stock is downtrending. As I said before, I use the 100 because stocks rarely pull back to the 200 SMA. So this is what I prefer. And just to give you guys another example, if we pull up VUG, this one has more pullbacks to the 100 SMA than SPY does. And as I said before, these act as very great entry points when you're looking to swing trade a stock. So that's why you want to be using SMAs if you're primarily a swing trader. If you're looking at playing long-term moves, these moves can be a few days or a few weeks or even a month depending on your trading style. But as you can see, having these moving averages on your chart alone is going to give you trade ideas right off the bat, because a stock pulling back to that moving average, and then once we start to see some bullish signs in that reversal, that's where we can go long and then play it towards the upside. And just to show you guys another reason why you should be using these SMAs, if we go over to a stock like Facebook as well, we can see that Facebook, nice strong uptrend. And again, these give you really great entry points. Right here, it's bouncing off of that 20 SMA. Right here, it pulls back to that 50 SMA. All of these are used as great entry points to play higher moves towards the upside. So as I said before, nice uptrending stocks you want to be using these moving averages with, and then buying it once it reaches to these support levels. Now, if you want to use more of an EMA versus the SMA, I'll go more into depth now on when you should be using EMAs. Now, EMAs mainly work when you are day trading stocks. I don't use EMAs on higher time frames. I only use the EMAs when I am on the shorter time frames, like the 1 minute, the 5 minute, anything like that, where I'm looking to get a quick in and out on my position. Alrighty guys, so now we're on the 1 minute time frame for eBay, and I'm gonna show you exactly how to add now the EMAs to your chart, and then which ones I personally use when I'm day trading. Now this indicator that I have right here is the VWAP. I always leave that on my chart when I'm day trading. It is also very good to use because it acts as great entries and exit points as well. But if we go over to studies and we click add study, and then we go down to that moving average column right here, we'll see it says moving average exponential. That's the one you want to click. And once we go back to studies, click edit study. Right here, we can edit it to what we want. I actually use the 9 EMA, so there's no need to edit this one. I'm only going to change the color. I typically put this one as green. So that's the 9 EMA, and then one more that I add is the 21. So if I go back to studies, add study, go to moving averages, click on that exponential one more time, go back to edit studies, double click on one of them. I'll change this to the 21 EMA. Alrighty guys, so now that we have the 2 EMAs added to our chart, I'm going to show you guys exactly how you can use this when you're day trading. Now, the green one is my 9 EMA, and then the blue one is my 21. Now, obviously, the shorter the number, the more it's going to hug the stock price. So right here, we can see the 9 EMA pretty much staying very close to that stock price. Now, every once in a while, the stock price can get far away from that moving average, but keep in mind that typically it tends to retrace back to its moving average. Now, right here, this is a great entry for a day trade. We see a little flag breakout right here on eBay. Right here, the stock pushes up very heavy at open. It retraces back or kind of trades sideways, waits for that 9 EMA to catch up to it, and then it has another move higher, bouncing right off of that 9 EMA. And as we can see, as long as it's uptrending and that 9 EMA is under it, it's going to act as great support, and the stock will continue to go even higher. Now, that is one way you can use the 9 EMA when you're day trading stocks. Great support on the stock, and it offers great entry points as well. Now, the 21 EMA something I also like to use. If a stock falls below the 9, another area I look for support is right at the 21. Now, if I zoom out a little bit more and zoom in here, we'll see right here, eBay kind of retraces back to that 21, bounces off, and then has that continuous move higher and stays above the 9. So those are two great EMAs you want to be using when you're day trading because it offers great entries and exit points. Now, when the 9 EMA starts to cross below the 21, that is a bearish sign. As we can see right here, the green line is starting to cross below, and then we start to see a little bit more downside. And right here, it actually acts as resistance. So it got rejected at the 9 and then fell even further. So you can use both of these EMAs both as support and then again as resistance if you're looking to play puts. Also, I have one more example for you guys with these EMAs on SPY. Right here today, SPY started to fall very, very heavy. It waited for that 9 EMA to catch back up to it, kind of traded sideways for a little bit, created that little bearish flag right there, and then once it hit that 9 EMA, it had a nice move towards the downside. As we can see in this instance, it's acting as resistance. So great entry points when you're day trading. This is why I like using moving averages, both on higher time frames for swing trading and then on shorter time frames when I'm day trading. So that brings us to an end for this video. In today's video, we covered what moving averages are, whether or not you should be using SMAs or EMAs, and then how exactly you can use them when you're trading stocks. If you learned anything from this video, make sure to subscribe and turn on post notifications so you don't miss when I upload. Also, if you have any questions about anything that I went over in today's video, make sure to leave your question in the comment section down below and I'll get back to you. Thanks so much for watching, and I'll see you in the next one.